Good morning. This is Thursday, March 2nd, 2023, and it's about 8 o'clock a.m. Pacific Standard Time. So the markets look like it made another new low, and it's still in a downtrend. So it looks like it's getting pretty close to this line of support. And we got this other line. So I'm thinking that this market eventually, either when it gets down to here, and at the very latest down to here, it's going to start retracing. And for you long-term people that have positions, put options in here, then of course you would stay and just wait. But of course you got to know that if the market does turn around and come back up here, you have to know when to get out of your position. And I would get out of my position if this market came back up here and started getting back into this balance area. Because that's going to do a couple things. That means that it's probably going to come back in this balance area and then maybe go up, which I doubt. But it's going to take even longer for it to come down. And if you have options that are going to expire pretty soon, then you probably want to get out of your position. So I don't think that's going to happen. What I think might happen here is the market might come down and hit maybe down here and then have a pretty good sizable retracement before it comes down again. So if you have options in here that you bought that are pretty far out, maybe in June, you can just wait till it gets down here. That's one strategy. The other one is if you're shorter term and you bought here, and then you wait till the market gets down to either here or here, you get out and wait for the retracement, and then you get back in. So there's so many different ways of trading this, different strategies. And so, of course you want to look at the other markets too. Like the Dow Jones looks like it doesn't want to let go of this area. So you can actually say this balance area, bring it back down here, has grown into that. So I would consider this still being in this balance area. And until it breaks down here, then it's pretty much free fall. But it hasn't done that, and it's going up while the other indexes are going down. So that could be a little concern right there. The NASDAQ. So these are the things you have to watch out for the market, and then make your decision based on what kind of trader you are. So for the day traders, go into a 5-minute chart. This is a NASDAQ. If you're trading the Qs on the NASDAQ, then you can see the NASDAQ came up and hit this pretty good resistance line. Still that same balance area that we saw earlier. Right here, this balance area here, still the same balance area. And in the 5-minute chart, this is that same balance area. Then, like I said, this is pretty good resistance here. So see what the market does. If you're day trading, this might be a good place to short it. If you think the market is going to continue down, then of course this would be a good short right here. And then the ES on the 5-minute looks like it's hitting. Let's see if we can find some. It looks like there might be a line right here as far as I'll draw that out. And there could be some resistance right there. Reason for that is because you got this gap for one thing. Came back up here, hit, and it bounced. And you got a couple of bounces here. It's not a very strong resistance, but it's still there, and it kind of coincides with the NASDAQ. So if you're trading this going down, you'd get in pretty much now, and put your stop up in here, this area, in case it changes. The only thing I am concerned about is the Dow Jones. So the Dow Jones came up, this 5-minute chart, this whole balance area right here is this grayed out area, and so the market came up and it hit this resistance line, which I drew out. I've drawn, like, I don't know when I did that, earlier today or yesterday, and you can see there is some resistance right there. There's a line of resistance, and so it's come up and hit that, and it looks like it's backing off, which is a good sign for day traders if they're trading either the NASDAQ or the ES. But again, you know, I would watch this too, because this could actually come up and break here, and if it does, it might bring the other markets up, and if you're day trading, then you've got to watch that. So day trading, you have to watch a couple more things than you do normally with a longer term trader, swing trader. So this is what I would watch. I would set this to 3 charts, and I would watch the Dow Jones, the ES, and the NASDAQ, and see if they're in sync. They should be in sync, and if they're not in sync and one of them's out, then that usually means that one of them, especially something like this, is starting to go in the opposite direction and could drag the other ones in that direction too. So another thing is you could set an alert right here if you're a day trader, and pretty much above. So if it breaks out there and you're not really watching the Dow and you're watching, let's say, the ES on the 5-minute, then you can see here it's coming back up, and like I said, if you bought here going down, then this would be a good place to buy. If it comes up here like the Dow did and it breaks, then I would definitely get out of my position and take a small loss. Same thing. So like I said, you could put an alert here too if you're trading the NASDAQ. Well, that's already set right there. So if I go into the NASDAQ, there. So if you're trading the QQQs, let's say on the NASDAQ, same thing would apply here. You don't want it to break above here. If all 3 of them break those lines, then it sounds like we're going to go back up short term. Could be an area, like I said, right here, where you can get in short if you believe this thing is going to continue down. And again, I know I'm repeating myself, if you do get in this position short, then you want to put your stop somewhere up in here, because if the markets start turning around along with the ES and the Dow, then we might do a pop-up here, and you don't want to lose any money, or not a lot of money, and then you want to get out somewhere around here, and then you put in your stop. Day traders should always put a stop in. That is the #1 rule. After you place your order to buy, you place your order to sell. Immediately, you place an order to sell. Now, it could be a physical sell, or you could put your stop in here, and it could be just a so this order could be an order that, like I said, it's either a physical order that you put in here, physical stop, an actual stop there, or you just have to remember that your stop is here, and then I would definitely put in an alert to remind you that you need to get out. Now, the only reason why you wouldn't put a physical stop in here is because sometimes the market pops up and it comes down. And so if you're okay with that, then you can put in a non-physical stop in here, and you just put your alert just so you can keep watching these markets. If you put in a physical stop in here, then the market will pop up, it will knock you out, and then it'll come back down. So those are things you have to watch out for, and the only way you're going to know that is you're just going to have to feel where this direction that this market is actually going. And if you feel like it's going down and you feel pretty safe, then you buy a position here going down, and you don't have to actually put in a physical stop. Probably not a bad idea to put one in anyway, but if you feel very confident in yourself and you have enough experience, you probably don't have to do that. Now, if you're trading futures, it's a whole different story, because futures, when it goes in the opposite direction, you're losing twice the money, or you're losing a lot of money going up, more than what you put in. In stocks and options, you can only lose as much as you put in. Now, of course, you don't want to lose everything. You would definitely get out way before that. Okay, so this is how you would day trade. I'm going to go back to the Dow, because I think the Dow is very important as far as in the day trade arena at this point, only because I do not want it to go above this line. And like I said, if you buy positions either in the ES or the NASDAQ, you definitely want to watch this and make sure. Now, this made a pretty good run up here without any kind of retracement on the 5-minute chart. So I would definitely look for a retracement here as opposed to a pop-up. Now, it could come down, retrace, and again go back up. But since you're day trading, and you're only going in for maybe a certain amount of points. Now, that's what I would do when I day trade. You know, if the market comes back down here, you can say, well, I want to gain, let's say, 10 points, and then I'm out. That's pretty safe. And 10 points, you know, with 4 contracts, you can get it's $4,000, right? Is that right? Let's see here. No, that's $2,000. Yeah, it's $2,000. Sorry, it's $200 a point, and if it moves 10 points, it's $2,000. So if you're okay with the $2,000, and you know, like I said, there's lots of opportunities, so don't worry about that. If the market continues down and you feel like you lost out, you didn't, because you gained that $2,000, and then you can wait for another balance area. Like I said, I trade balance areas, and this is a little balance area in here. Dow Jones started to create a little one in here, and then the NASDAQ, same thing. This is actually a larger balance area. Now you can see the markets are starting to go down. So if you would have bought a position here going down, then you would have been making money right away. Because right now it looks like it's pretty safe as far as the market going down. So this is how you day trade, by watching these patterns, making sure that you have these little balance areas that you can trade in, because that's what's going to tell you what the market's doing. And when it builds a balance area, eventually it breaks out and it goes down or goes up in a big way. We already talked about that. Back to a 4-hour chart, same thing. You know, you hit these big balance areas, it breaks down, and it comes down into another little balance area, breaks down. Conversely, if this were to break up, then it would go into a little balance area. So here's one here. It broke out of this balance area, and it came up, and you know, pretty much it didn't create too much of a balance area here. Hit here, came back, retraced about 50%, or at least a 38%, like we talk about in the Fibonacci. Then came back up here, built a little balance area here, came down, retraced the 50% from here, or close to, and then went up here. So this is a pretty strong rally right here, very strong. Didn't really have too much time to build these little balance areas that I'm talking about. It's a very strong uptrend here. And then finally it hit here, and it hit this balance area, which here it would determine next direction, up or down. So of course, I assume they go down, because there hasn't been a correction from here to here. So it's got to at least correct at the very minimum. So Okay, that's it for today. Today's Thursday. We got one more day in a week, Friday, and let's see if this market starts coming down for your longer term traders, and see if it comes down to a certain point before it starts to retrace. Now, like I said, this hasn't really retraced yet. Came down here and it retraced within this balance area, but from here to here, we don't have a retracement yet. So there's one coming up. Like I said, this market came down here, it retraced, came down here, it retraced. Nothing here yet. So it's coming up, and I don't know if that's going to be at this line. It doesn't look like it's going to happen now because, like I talk about, this market has to have some kind of symmetry to it. And if it pops up here, it seems like it would be kind of out of balance. It looks like it would have to probably come down in this area before it comes up, and that would be more symmetrical with all the other movements of this chart. That's, of course, that's my idea. This is what I see. Of course, you want to probably check out other traders and see what they're doing if you want. I mean, that's up to you. You don't have to take my word for it. But this is how I trade. I've been trading like this for years. I've been trading for 24 years, and I got a system down that works for me. There's other people who have other systems that work for them. This system might not work for you, but it can give you an idea, and maybe while you're putting your system together, you can put parts of my system along with parts of somebody else's system, and then try that. There's not one system on this planet that works for everybody. That can't be true. Otherwise, we'd only have like one book, one religion, then, and that's just not happening. Of course, everybody has they're individuals, so they get to choose what's right for them. Okay, so that's it. Pretty much done. I hope I explained everything. I did add the day trading for those day traders. There's a lot of day traders out there, and so they encouraged me to add that in there. So I did that, and I'm going to continue with that. And I'll continue to change this a little bit. Maybe do some different modules on different things. Like I redid one on balance area. Maybe I'll upgrade that one. I'm going to make a video on specifically day trading options, and do another one. I saw this person yesterday. She's trading, and she had all these chart patterns that she was looking at. So I'm going to make a video on chart patterns. I don't think a person should look at those chart patterns because they're not accurate. At the most, maybe 50%. But I'll do a video on that. Now, these chart patterns, like I put here, these are the ones that I trade, and these are pretty accurate. I mean, they're in the 90% range. So that's what I stick to. But anyway, I'll make a video on that. Okay, so that's it. I'll talk to you guys tomorrow.